Evan, I tell you, if you're looking for a mortgage or thinking of buying a home, you want to listen to this. It's long been talked about, but the confirmation's now here. Big changes have arrived for anyone hoping to get a home loan. And it's all about how much you earn. Your income will be tied directly to how much a bank is able to give you. It's something home buying hopefuls haven't had to contend with, but will it make a quick difference? A mortgage advisor, Sara Hartigan's here with her thoughts. Sara, we're talking about debt to income ratios here. Will it make a difference at all?
Oh, absolutely. It's been coming in for the last 2 years. It's been talked about. Banks have, pre-warned us. It comes into effect the 1st of July. And it's really just to stop people getting into unmanageable debt. I mean, if you think about it, 2 years ago, I was writing loans where people were getting 2.25 as an interest rate. And now we're rolling off and, I've got clients that are going from that 2.25 into 6%. And it can be unmanageable and it can be quite frightening.
So break it down for us. How does it work? What are the rules?
So basically, the Reserve Bank has come in and said that people who are going to borrow for a home loan can borrow 6 times their salary. So mum and dad, say they're on a combined income of 150, they can borrow 6 times that. So their loan can't be any bigger than 900,000. Whereas before, especially in the heyday where the market was booming in 2021, 2022, people were taking out big loans. And now it has become, somewhat of a point of crisis.
And in terms of that crisis, what kind of stories are you hearing or seeing or trying to manage with your clients?
Well, we've got people that have got negative equity in their properties. So Wellington, I've had a couple of people in Wellington where they bought at the height of the market, and so they bought for $900 or $1 million. Their properties are now valuing at $800,000. Again, you've just got to sit out the cycle. Don't do anything rash. You've got to really budget. I think this is where people need to hunker down, look at their budgets. Maybe they're not going on that overseas trip. Maybe they're just popping down to Rotorua. Maybe, the new car has to wait for a couple of years. But the good thing about New Zealand is we always prioritise paying the mortgage first. So I think it's a lot less brunch dates and a lot more home.
You talk about Wellington. I mean,
Yeah.
Is there a difference between cities and smaller regions?
Definitely. I don't think the debt to income ratio is really going to affect sort of like the outer regions because, the house prices are a lot lower. But you've got your Aucklands, your Christchurch, where the house prices have just been climbing at an unsustainable rate. I mean, I've got a 12-year-old son. And, in 20 years or 15 years when he goes to buy a house, I don't need him coming to the bank of mum.
Yeah.
He needs to be able to purchase. And it's getting to the point where the incomes aren't matching what the capital growth is. And so the Reserve Bank is kind of trying to put the brakes on it.
Sara, we just heard earlier this month the first home buyers grant has been scrapped.
Yes.
Now DTIs are being introduced. Is that Kiwi dream of owning a home just slowly disappearing for many Kiwis? Is this going to lock us out of owning a home?
I think you're going to see a lot more families buying together. The intergenerational purchase, mum, dad, daughter, son-in-law on a mortgage. I do quite a few of those. You're also going to have to see the bank of mum and dad stepping up and maybe helping out with the deposit. And I think people really need to think hard about KiwiSaver because that's where most of the deposits we see are coming from. People aren't great at saving.
Really?
No.
So we're talking about DTIs, but there's also another acronym, LVRs.
Yes, loan to value ratio.
Yes, explain that and how that comes in.
So basically that's the amount of loan that you can borrow versus the value of the home. So first home buyers can get in with a 10% deposit and investors can get in now, from the 1st of July with a 30% deposit.
Right.
So gone are the days where investors were buying up houses with just 10% deposit. The Reserve Bank is just trying to slow the market down a bit. And again, your deposit, that's your buffer between what you owe the bank and what your property's worth.
Is it a good time to buy or is it a good time to sell?
Always a good time to buy.
It is always a good time to buy.
Yeah, the Japanese have got a saying, when's the good time to plant an acorn tree? Now. I always recommend buying and selling in the same market because that way, if you sell now and buy now, you're buying, relatively in the same capital growth market. Now is a good time to buy. You marry the house, date the interest rate. Don't be too concerned about the interest rate. That's not going to be your long-term partner. The house is. So as long as you're budgeting, and what I do find with first home buyers is they get the home and then they whip down to Harvey Norman, chuck on 10 grand on the gem visa, and then 6 months later they're over in Bali.
Right.
We need to slow that down and just remember that the interest rates do fluctuate. And we had a very long period where interest rates were amazing and they went up really quickly and they're not coming down as quick as people thought.
Sara Hartigan, the Umbrella Company, thank you so much for your advice. Really appreciate it.
Sara, just before you go, can you tai hoa for a little bit? Just want to ask you what this actually means, what this new lending criteria actually means for people who are trying to get into their first home, because a lot of our feedback is around that, having their children now having to go overseas because they can't afford to buy here in New Zealand. So these new rules, what do they mean for first home buyers?
It means that they can borrow a lot less. So they'll be borrowing significantly less. So it's basically to manage debt. So instead of being able to get a mortgage of, $1 million, their borrowing power is reducing.
And so that's a good thing, because on one level it's a good thing, because like you say, you've had a number of people who've got themselves into trouble by being able to borrow too much when the interest rates were relatively low, right?
Absolutely. I think it's a good thing. In my opinion, it's a good thing because we do have people taking on so much debt and just living beyond their means. And again, we've got really high rates of people defaulting on credit card payments, car loans, that sort of thing. So yes, I believe it's good. If you're a homeowner right now, if you're looking to buy right now, you may not feel it's a good thing because you're knocked out of where you want to buy. So it's refocusing around, you might not get the house of your dreams, but at least you're getting on the ladder.
Yeah, exactly.
I mean, you mentioned that. I also want to ask, you mentioned the bank of mum and dad and how, people like your kids might eventually have to come to the bank of mum and dad. The difference is, though, that the current banks of mums and dads are from that generation where they might have more equity, they might actually have houses already. When I open my own bank of mum and dad, it's going to be quite different to what there currently is, right? So how does that work?
Absolutely. There's a lot of people that are borrowing part of their deposit off mum and dad, or mum and dad are going in with them on the property. It's also to do with whether mum and dad can afford to release that equity, because people have got mortgages for a lot longer.
And that's what I'm saying, right? Because now this generation, the millennial generation, they're not going to have the same resources that their parents did. So
no,
it's not the same.
Especially with the house prices being as expensive as they are. I mean, yes, when we look at house prices in Auckland, they are very high, but you're also having people who are 65, 70 and they've still got mortgages.
Yeah.
So again, the banks are going to look and see, can mum and dad release that money and can they afford to pay that mortgage?
You sort of saying,
Thanks, Sara.
Yeah,
appreciate it. Thank you.
We're sort of telling people be savers, be good with your KiwiSaver, plan for retirement. But then it's also like, and also plan for your retirement to have enough money for you and to help the kids out as well.
Yeah.